inflationary pressures remain under control despite the moderate rise in both headline and core inflation in December 2012. Annual headline and core inflation rose to 5.5% and 4.6% respectively in December 2012, from 4.9% and 3.9% in November 2012. Core inflation nonetheless remains within BOU medium-term targets of 5.0%. The rise in inflation in December 2012 is largely attributed to seasonal factors and demand pressures associated with the festive season. Looking ahead, inflation will remain moderate for most of 2013 and will stabilize around the BOU medium-term policy target of 5%. Upside risks to inflation could, however, emerge in the event of higher global commodity prices, shocks to domestic food production, and external shocks to the domestic economy. The available real economy indicators show that economic activity has started to pick up, with quarterly GDP expanding by 2% in the first quarter of 2012 to 2013. The annualized GDP growth for the last 3 quarters of 2012, which was 5.2%, was much higher than previously projected. Growth in monetary aggregates is also picking up, although private sector credit growth remains subdued, partly on account of high lending rates on shilling-denominated loans. Given the lag in the monetary policy transmission mechanism, I expect a further reduction in lending rates. A stronger economic growth recovery should start in the later part of 2013, as the accommodative monetary policy stance pursued in 2012 and improvement in credit extensions feed through to private domestic expenditure. Furthermore, the improving global economic outlook may strengthen domestic economic activity in the near term. The Bank of Uganda monetary policy will continue to focus on maintaining low and stable inflation without compromising economic growth. I repeat, the Bank of Uganda monetary policy will continue to focus on maintaining low and stable inflation without compromising economic growth. The bank considers the current stance of monetary policy to be accommodative and supportive of economic growth, as well as anchoring inflation expectations around the medium-term targets. Therefore, Bank of Uganda will maintain the central bank rate at 12%. The band on the CBR will be maintained at ±3 percentage points on the CBR, and the margin on the discount rate at 4 percentage points on the CBR. The discount rates and the bank rates will thus remain at 16% and 17% respectively in January 2013.